Hello there, this is the Bookkeeping Master on YouTube. Welcome to this video. This is a presentation that will cover the basics of finance and accounting. My website is www.freebookkeepingaccounting.com. I'll go through the many free features on my website at the end of this video, at the end of the presentation. Accounting and finance basics. The easiest way to learn anything, especially finance and accounting, is for me to make the material as relevant and relatable to you as possible. So I'll probably try and use as many personal day-to-day examples as I can. Some of these subjects are quite complex for some people to get their head around, so I will try to keep things as simple as possible. Income, that's the first thing that I want to talk about in this presentation. Income can mean a number of things. You have some income, whether that's income from a job, income that comes from a rented property, perhaps you have interest income on some savings. Income is money in to an entity, or relating this to you, it's money into your household, money that goes into your bank account each week, each month. It could be welfare, state welfare, it could be a pension. It's money in to an entity. So money in is generally referred to as income in the accounting and finance world. Now, there are many aspects to this. In a company, if you're looking at company accounts, income could mean certain things and not other things. But that's for a video at a later time. I don't want to make this too complex. So expenses is money out. So in your household, you'll have money coming into your bank account and you'll have money going out. And this money going out is generally expenses. If it's not an expense, it's paying back debt. Perhaps paying a mortgage, it's paying money back that you owe. Now, if you were to create a budget and list your money in and your money out, you'll end up with a deficit, meaning there's more money going out than there is coming in. So expenses could be greater than the income, or you may have a surplus, and that's the ideal. Now, to demonstrate this further, if I end this slideshow and bring up a basic budget. So here we go. So this is just a basic annual budget. We have job one. Let's do £15,000, could be dollars. Job two, let's say it's 5,000. And you may have other income too. Perhaps you have interest on savings. There could be some sort of welfare or state benefit you receive, perhaps a pension. All of this can be listed here. And we would list the figures. This is our budget. This is money in. So total income, total money in is just over £20,000. And then we have our expenses, our money going out. So we have things like rent for a year, electric, gas, council tax if you're based in the UK, mobile phones, you'll have grocery bills, and the list goes on and on. These figures aren't really realistic. It's purely for an example. So at the bottom here we have total expenses or total money out. I've got credit card interest, and you'll see that there's money left over. So at the end of the year there's £3,500 just over left. There's a surplus of income, which is ideal. If it was not like that, let's make this figure a lot bigger. You'll see we have a minus figure, so there's actually a budget deficit. Now this is keeping things really, really simple. If I was going to be a bit more complex and come and teach this from an accounting perspective, then some of these things might not be classed as expenses. There could be money going out that's a mortgage payment, or perhaps some sort of loan repayment. That's not really an expense, it's money you're paying back. But just to keep this simple, we have money coming in and money going out, and there's either a deficit or a surplus at the end. So let's carry on with this. Okay, so budget deficit, budget surplus. Moving on to the next slide. So cash flow. If your income is less than your outgoings, you will always have a negative cash flow. That doesn't mean that you're going to run out of cash at the end of each month, but it does mean that your cash flow is going to come down. Now, what do I mean by cash flow? Something you need to realize in life and in the business world is cash is king. You need cash to survive. You need money to pay for your financial commitments. If you don't have sufficient cash, that's generally referred to as cash flow difficulties. You don't have enough cash in the business or in your household to meet your financial needs, financial commitments. Now, if I end this again and bring up another file, so cash forecast, I have a basic cash flow forecast here. You can see I have the month at the top here, the opening cash balance, that could be a bank account, any money coming in, and then money going out, and at the bottom here is a closing cash balance. So you can see the end of month one, there's just under £35,000 or dollars left. In the account, month 2, 36, 38, 40, 42, 44, 46, 48. So we have a positive cash flow. The cash flow is actually growing. There's more available cash at the end of each month. This would suggest that the income for this entity or for this household, if this was a household, is greater than the money out. If the money out was actually greater than the money in, so if I change some of these figures here, then available cash would actually be shrinking. It would be negative at the end of each month. So just changing this, you can see it's coming down 30, 27, 25, 22. So if this was your household cash flow statement, or if this was a company cash flow statement, you would be getting concerned, because it looks like another 4 or 5 months' time, there's actually going to be no cash left in the business. Why is this a concern? Because cash is king. If you run out of cash, you're going to go bust. And it's the same in a household. If you run out of cash, you can't pay your bills, what happens? You could face bankruptcy. You can't make your financial commitments. Now, in order to improve cash flow for a business or entity, looking at it from an accounting and finance perspective, there are a few options. You can cut the money going out of the business. You can make cuts. You can lower your expenses, lower the money going out. You can increase the money coming in. And that's your two main options, really, is to increase the money coming in or decrease the money going out. Now, going to a household, or relating this to a household, how could you improve cash flow for your household? It's the same sort of thing. So you can cut your money going out. You can try and budget better, spend less money. If you are making big mortgage payments, big debt payments, you could try and renegotiate a better price. You have less money going out each month. Alternatively, you can increase your income. You can try and get a better paid job, or you can get a second job. Look at your income streams and try and increase them. Hopefully that makes sense. That's the basics of cash flow forecasts. I understand I'm going pretty quick through this, but we have a lot of material. I want to try and keep this video as short as possible, but you'll see at the end of the video that I have single videos about cash flow and single videos about income and expenses and things like that, and I'll provide you with links to those videos at the end of this presentation. So let's start this again. Okay, so positive cash flow. In order to meet your financial commitments, you need positive cash flow in order to meet your financial commitments long term. You might be able to meet your financial commitments this month, next month with a negative cash flow, but eventually the cash is going to run out. Cash flow and ensuring a company or a business has enough cash is one of the reasons why a business plans, why a company will create a business plan. They want to ensure that there's enough cash to meet the financial needs or commitments of the entity. So in a business plan, documents like a sales forecast, so an income forecast will be included, an expenses forecast, a cash flow statement, a projected profit and loss statement, so showing the profitability of the business or company, and I'll come back to this later on in this presentation, and I'll also come back to this later on in the presentation. So projected balance sheet. Don't let these words confuse you. I'll explain what these are later on in this presentation. So let's see if I have another file that I can share with you. So this is a business plan example. So I've got a sales forecast, month by month, sales coming in, income coming into the business. These are all sales. There's an expenses forecast, so money being spent to keep the business running month by month. A cash flow statement. I've already been through one of these with you. And then you would have a projected profit and loss statement and a projected balance sheet, and that's like the basic financials of a business plan. If you have any questions about anything I'm covering, just put something in the comment section below and I'll do my best to answer your questions. Okay, so we've been through that. Next slide. Business, finance and accounting. So in the business world, in finance and accounting, income generally refers to things like sales. Sometimes that's called turnover. Expenses are generally referred to as overheads. That was a quick slide. So profit and loss statement. So sales, what you have of a profit and loss statement are the sales of the company or business minus the cost of sales. Now the cost of sales is a direct expense that relates to selling or creating a sale. So let's say that you're selling a product on eBay and you pay £50 for a product and sell it for £100. The cost of sale will be that £50, plus any fees you have to pay to sell the product on eBay. It's expenses that relate directly to providing the sale or making the sale. Another example would be if you provide a service for somebody and you pay an agency a commission for each job they refer to you, that will be the cost of sale plus any materials you use to provide that service. Sometimes this can confuse people, but it's just expenses that have a direct link to providing a sale. So you have your sales minus your cost of sales, and that will give a gross profit or gross loss for a company. You then have minus expenses or minus overheads. So this is things like rent, rates, electric, wages. These things don't really have a direct link to providing a sale. Your internet bill, your phone bill, these things you can't directly link to providing the sale. These are your overheads. Once they've been taken from the gross profit, you have a net profit figure, and that's the profit or loss figure for the company. Let's see if I have a template that I can share with you. Okay, so here's a profit and loss statement on the left here, or ignore this on the right. So we have turnover, cost of goods. So it cost me, or cost this company, £2,200 to make this many sales. So that's our gross profit, and then admin expenses. So this is just a group total of things like wages, rent, electric, and then we have profits for the period, which is the net profit, which is just down here. Let's start this again. So a balance sheet. A balance sheet lists the assets, liabilities, and equity of a entity, a company, a business, a charity, whatever it is. An asset is something that is owned. So your assets, if we're looking at your household, would be like furniture that you've purchased, could be things like electrical goods, a computer, a TV. These are assets. You may have bought a car. That's an asset to you. Things that you own. And in the business sense, assets are generally things that you own that have a significant value. If you have work uniforms, polo t-shirts or something like that, or maybe boiler suits. These are things that a company may own, but they're not really of significant value. Whereas the machines that a factory may purchase, the company cars, the computers, the office furniture, these are assets. They have significant value and they're owned by an entity. Liabilities are the opposite. They're things that an entity owes. So going back to your household, you may have debt, and liabilities is usually linked to debt. So you may owe money each month to a bank because you have a mortgage. Perhaps you have a credit card with a balance on. These are things that you owe. And then equity is to do with ownership. So it's similar to assets. Assets are generally tangible goods that you own, whereas equity is ownership in something. So a lot of people refer to equity with their mortgage. They have 40% equity, meaning they've paid 40% off their mortgage, or they own 40% of their home. It's the same with a company or a business. If you're referring to equity, it's the amount of money that an investor has put in to a business, or sometimes it can refer to the percentage of their ownership of a business. Now, closing this again and bringing up that file that I just had, which is here, you can see there's a balance sheet here. So it lists the assets at the top here, and then liabilities and equity at the bottom. So assets, there's a computer asset, £362 or dollars. The bank account is an asset. The money in the bank we own. And there are other things here. And then we have like shareholder funds, which is equity. And then there are no liabilities, but it could be that this entity has debt, that it has a business bank loan or something like that, and that would be listed. And that's the basics of a balance sheet. So the profit and loss shows the profitability of an entity. The balance sheet lists the assets, liabilities, and equity. Now these figures are just for an example. Please don't pay too much attention to the figures. It's just for example. Okay. Let's move on to the next slide. Double entry bookkeeping or double entry accounting. So when recording the financial transactions of a company, a business, some sort of entity, there are always two aspects of a transaction which are referred to as debit and credit. So if I was to buy something with the company bank account, the transaction would be credit the company bank account and debit the expense account. And there's more to it than that, but I have videos that go through double entry bookkeeping, which I'll go through with you. I'll show you how to access those videos at the end of this presentation. So debits and credits will always equal. They will be the same. So if you have £100 debit or $100 debit, there will be a corresponding £100 or $100 credit. Some more details: freebookkeepingaccounting.com. Let me bring up my website now and just show you how you can access videos and learn more about what I've been through in this presentation. So freebookkeepingaccounting.com, bookkeeping and accounting courses. So if you're interested in double entry bookkeeping, you can just click on this link here, free bookkeeping course. There's a free course here. This is all for free. You don't have to pay for any of this. There are donate tabs across the website, but you can watch the videos for free. You can see that financial terms are covered, like capital asset, fixed assets, liabilities, and then the double entry aspect of bookkeeping and accounting. Free business planning course if you're interested in creating or knowing how to create sales forecasts, expenses forecasts, and so forth. There are free videos once again on that. Free management accounts, free credit control, free payroll, using Excel and accounts. There's a number of free videos here. And then there's a bookkeeping blog here, and you can learn all sorts of things by clicking on that. Once again, that's for free. And just making sure I've covered everything. I think that's it. Okay. There are more links here as well on the homepage. You can use these to access the free material. So hopefully that gives you a very basic understanding of accounting and finance. I have rushed through this material. I do apologize if I've lost you. But the good thing about YouTube is you can watch the videos over and over again. So you can go back, watch the video again. If you have any questions, like I said, then put something in the comments section below, and I'll do my best to get back to you. Alternatively, you can send me an email, info@bpfs, that's Bravo Papa Foxtrot Sierra -online.com. You may actually be able to find my email on the website. I'm just having a look. Okay, yeah, it's down the bottom here. Email info@bpfs Bravo Papa Foxtrot Sierra -online.com. Thank you so much for watching. I appreciate any support that I get, so please like, please subscribe if you haven't already, and please watch more of my videos.